Hey, everybody. Before we jump into today's episode, I just want to point out a few ways in which you can work with us here at How to SaaS. Number one, if you're an investor and you're in the middle of a transaction and you want to figure out what is the marketing potential of the target investment that I'm looking at, you can engage with us in a due diligence engagement where within 2 weeks, we can give you a very clear picture of all the levers within the marketing function of that organization and how you can scale budget up and down and find efficiencies and make the overall marketing function far more mature. Number two, if you're a founder, a CEO, an operator, or even an investor, and you have a company where marketing is just under leveraged and you see it as a growth lever for your business to take it to the next level, you can engage with us in a 3 to 4 month engagement where we do a deep dive and look at all the possible areas where marketing can make a bigger impact on the organization and come back with a detailed set of recommendations across demand gen, paid media, ABM, content marketing, product marketing, SEO, you name it, and come back with a full set of recommendations, your entire new org design to support those recommendations, and overall budget recommendations for the business. And number three, if you have a particular business where maybe your VP of marketing was recently transitioned out, maybe they left for another job, maybe you don't have a CMO but are thinking about hiring one, well, we can fill that gap within your organization with part-time CMO services. And we do this on a month-to-month retainer, which can last anywhere between 3 months to 12 months, depending on what your needs are. And we can help set the foundation for the company and help you hire your next CMO and help onboard them into the role so that when they come into the organization, they get a running start and they're able to make an impact on revenue right away. And you don't have to wait to find the right person to get going with all your marketing initiatives. So those are all the ways. If you want to learn more, go to www.howtosas.com and schedule a consult, and we can go from there. And now on to the episode. Enjoy the show. Welcome to the Private Equity Value Creation Podcast, where we interview leading investors, operators, bankers, and advisors to help you answer one question: how do we increase the enterprise value of our companies? My name is Shiv Narayanan, and each episode I will dive deep with a guest to help you become a better value creator and capital allocator. So with that said, let's jump right in and let's get started with today's episode. My guest today is Daniel Pianko. He is the managing director of Achieve Partners. And what's really interesting about Achieve is that they have an impact fund with which they're trying to make a big difference in the companies that they're investing in. Specifically, what they do is once they invest in a business, they also provide that business with a vehicle to hire young graduates and new entrants to the workforce and create a process for training them up to become valuable contributors to those organizations and the clients those organizations serve. It's a very different type of investing model and value creation thesis, so I'm really excited for you to listen to that. And it's different from other PE investors that are more focused on just creating enterprise value in the business themselves, as the impact fund that Achieve is running is also about making a difference in the communities that those businesses operate in. So the types of companies that they've invested in are very different than a standard private equity firm. So with that said, I'm really excited for you to hear all of Daniel's takeaways and his insights, and hopefully you can take a lot away from it for your particular business or investment fund. All right, Daniel, welcome to the show. How are you doing?
Excellent. Thanks for having me, Shiv.
Excited to have you on. Obviously, with the work that you guys are doing at Achieve Partners, this is a different kind of interview. So why don't we jump right in? I think the right place to start for the audience, just to learn more about Achieve and what you guys are up to, is to talk about your investment thesis and your overall philosophy in terms of the types of companies you invest in and what your approach is to the overall fund.
Yeah, so we have a really simple belief, which is that in kind of protected markets, you can create really high alpha by using the information advantage you have for being a sector expert. And so our area of expertise is education, and really not just education, but the future of how we learn and earn in the future. And so what we do is we look to invest in companies where we can create a lot of organic growth quickly because of our expertise in this concept of the future of how we learn and earn. So in a nutshell, we're a buyout firm, which I know is a little different than a lot of the folks you have on the firm. So we buy companies. And then we sort of partner with amazing management teams to grow them more quickly by leveraging our expertise in this kind of very narrow niche of learning.
Got it. And tell me a little bit about the size of the companies that you guys are investing in. What is on the lower side, the ARR or the revenue that you're looking at, and on the high end, how big do those companies get?
Yeah, generally we're looking for companies between, depending on the strategy and what we're looking to do, between really $5 or $10 million of revenue as a minimum. Sometimes we get there through acquisition, and then up to with some of the non-software businesses, up to 80, 90, $100 million of revenue. So that's roughly the range that we invest in.
And then on the organic side, when you're talking about organic growth, obviously you're not talking about just like content and things like that. You're talking about growing the company without acquisition. So on that side, what are the approaches that you're taking to grow those investments out? Obviously, I've seen a lot about your impact fund and last mile training. Is that what you're referring to, or are there strategies beyond that?
Yeah, so we have really two strategies. One is what you referred to as last mile training. And what we do there is we look to invest in companies where the CEO says, my biggest problem is I can't find enough people who are trained in this specific topic. Effectively, think about areas where if you open the New York Times, or just think about it, we just have a supply demand mismatch for talent. So we don't have enough nurses, we don't have enough cybersecurity professionals. But there are also really great niches like Workday or Salesforce administration, where we think about it every time there's a big SaaS company that goes public, a potential ecosystem of talent needs to be developed. And so we like to invest in companies that are services businesses, business services companies that service those areas. And then what we do is we turn the biggest problem that they face, how do we find those people, into a value driver. And the way we do that is we actually build apprenticeship programs into the company. So if you're Salesforce implementation firm, we're going to partner with you and try to bring to the table building what we call last mile training, which is where think of it as a full stack approach to talent development. So we'll recruit amazing talent. We will train them. We'll guarantee them a job. We'll hire them just like you would have been hired 20 years ago if you were going to go work for a big company. We pay them while they're in training. We train them for anywhere from 2 to 3 months, boot camp style usually, and then we put them to work. And you think about it, this is the way people used to get jobs, right? It used to be that you were on a college campus, or a recent graduate, or if you're working in the trades, and you would get a job somewhere. And when I graduated from college, I went to work for Goldman Sachs. I had a great luxury of doing that, and they basically put us I was a history major. They put us in a classroom for 2 or 3 months. At the end of it, I was an investment banker and building models for large companies. It's a little different when you're talking about sort of specific tech skills, but it's the same concept. And I think underlying a lot of this is, if you think about it, when you grew up, or when a lot of folks who are listen to this podcast back in the 90s, early 2000s, big companies had these large training programs. And all you needed was to be a smart kid, and they'd hire you and they'd train you to be a sales professional or do something else. And that's really, with the last 2 recessions, that's really gone away. And the result of that is we have about 11 million unfilled jobs in the United States. I mean, it's an amazing statistic, right? 11 million unfilled jobs. Almost all of the majority of those jobs require tech-enabled skills, or some kind of very specific skills. And so, in effect, there's a lot of talent out there. There's probably about 40, 50 million unemployed, underemployed, unhappily employed people. And we take those folks who are making maybe $30,000 as a barista at Starbucks, and give them an opportunity to go from there to making 100, 200 grand a year over a period of couple years. So that creates a lot of value for our portfolio companies, for the people we are employing through these last mile training apprenticeship programs. And then, also most importantly, there are customers. Because if you think about it, usually if you have a business services company, you're very strict, non-solicit, non-compete, can't touch our people. We take the opposite approach, right? We're creating people. Please hire our people. That's great, because this person now has a great job, and then we can bring someone else as an apprentice and grow them. And so when we talk about organic growth, what we're really talking about is, this is the type of program where we're bringing a lot of expertise to the table, and we're driving significant growth for our portfolio company by bringing in this strategy.
Yeah, that's a really commendable mission. We talk about that as we're building our own consultancy out, and you kind of have bottlenecks as you go through stages of growth. And one of the most common bottlenecks is when you have enough sales, but you don't have enough talent to catch up to the volume of sales that you're dealing with, especially in the services industry. So you kind of get stuck in this hiring cycle where you got to go find the people to service more business. Until then, you can't sell more, and then even if you sell more, you don't have the bandwidth to actually to deliver high quality work. So I think that mission is commendable. What I'm trying to understand a little bit better is that pipeline building or the apprenticeship programs, is that work that's done by Achieve, or are you going into the companies that you're buying out and setting up almost like an internal apprenticeship program within them?
Yeah, so our goal is for each of our companies to operate independently. So the first 6, 9, 12 months of investing in the company, we tend to be very active trying to help build the capacity of the company to actually deliver this last mile training. So it's partnering with amazing entrepreneurs who care deeply about this, right? Like if you cared about this and what you did, and you said, "Hey, I realize, I realize this is, and I'm at the stage in my life where I really want to build this into my company." Those are the people we love to partner with, and then we partner with them. We invest in their company, majority stake. It's kind of the strategy, and then we work with them to build this talent development system.
Does that approach sometimes distract the portfolio companies, because there's also this trade-off, right? You can build a core business and actually build out the internal processes, or just hire someone that's already kind of good enough, maybe even overpay for that talent, and then focus on actually driving sales and pipeline, versus like almost having this almost like a separate business now, where you have to now nurture and train talent. And I get that that's part of your investment thesis, but I'm trying to connect the dots on how does that approach help you ultimately create more value within that business.
That is the inherent tension, and I even hear it in your voice as a business owner, right? If I invest in this, I can't do this, right? If I and so what we really look for is areas where there's a huge amount of synergy, where there's a natural apprenticeship pipeline that we can build. And so, yes, that is a core thing we look at in diligence. We're talking about work, right? And in general, where it's most successful is where it becomes a key value, right? And this is what's important. So let me give you a simple example. It's really hard to. Who do you sell to, Shiv? Who's your buyer?
Our buyers, private equity firms, and we work with them either on due diligence engagements or post close. We'll help them identify opportunities on the marketing side for their portfolio companies.
So it's hard to probably get a meeting with a prospective client, right? It's hard to get a meeting with a partner at a private equity firm. Right?
Yeah, most of our business comes through people that follow our content or read our book or through referrals.
Right. And so it's really hard to get those meetings, especially what our portfolio companies can do is we can come in and say, look, hospital or private equity firm or whoever, you have trouble recruiting yourself, right? Just take electronic medical record. There are estimates of 3, 4, 500,000 unfilled Salesforce implementation. You can get a meeting with the CTO if you say, "Hey, I know you're implementing Salesforce. At the end of our project, you get to keep the talent." So you could approach that as, "Oh my God, this training thing, it's detracting time," right? But for your biggest potential customers, those new relationships, how do you get that meeting with the CTO of a company implementing Salesforce or a university, whatever? You get to do that by going to them and saying, "Hey, we create this talent. We encourage you to hire it. And by the way, that talent across our first portfolio, roughly half of that talent is female, and over 2/3 comes from underrepresented communities. So not only am I filling your talent gap, I'm also filling your diversity, right? And so it becomes very powerful. And even if that person only hires 1 or 2 people from our program, we estimate that for every dollar of last mile training revenue we generate, we actually generate an incremental dollar of revenue from just getting that increment. And so we really, if someone views it as either or, it's gonna fail. It's creating that flywheel of success around talent training.
There's another benefit to it, and we talk about this a lot. Like, we're a management consulting firm, and we're doing these large scale consulting engagements with PE firms, and our deal sizes are large. And so we need talented people to be able to service those engagements. I can't have, let's say, a junior marketer having a board meeting with 5 private equity investors. It has to be a C-level person. But we run into this problem where there's a supply and demand problem where there's not enough marketers out there that have acquired those skill sets to be in that room. So in a way, we have an internal school. When we hire people, I am taking them through an internal training program and coaching them. And we have had people leave for jobs with clients eventually as part of being on this journey. And so I totally get that as part of the a value prop. And one of the benefits that can come from as I'm talking to you is that when you're able to staff up with more junior employees and you're training them, your gross margin goes up. And so that's another type of benefit.
Don't tell anybody.
Yeah, so why don't we talk about a little bit about that, because the gross margin is a key piece, especially within services firms, because your effective hourly rate that you charge to the client minus what it's costing you is where the growth really is.
Yeah, the most profitable people in most of these services firms are junior people, right? I mean, if you can sell enough work and they're good enough, and so yeah, we do see gross margins improve. That catches up to you over time, right? That's not a
Yep.
forever thing, right? People are very aware of their, especially these days. Like you can just look on any number of websites and see what a comparably skilled person will get. But generally, we do see significant margin expansion by using trainees. And again, it's not forever, right? So it can have a nice impact on your margin by building in this training program. So it does become, but that now you're starting to understand why a lot of people start to view this as a competitive edge, right? If you have trainees that you can staff on maybe lower level problems, you can build maybe a services business that you wouldn't have been able to build with experienced talent to handle low level issues, right? I mean, I don't know, in your business, maybe it's, Twitter tweet posts or, a
Sure.
LinkedIn post or whatever, right? You don't need 30 years of experience to be able to do that, or even 5 years of experience, right? Anybody can write it. Now you may need someone to review it and make sure it's good, but like you can put some folks, answering questions. Hey, give me 20 tweets as an example, and then type it into ChatGPT, and 5 minutes later you got 20 tweets, and that can drive the ability to leverage those junior people if you have the right types of services to offer, can drive the ability to add additional services that didn't make sense with experienced people, and two, in general, kind of drive up their gross margin.
Right. Are you selecting the companies that you're investing in? You mentioned this earlier. You're vetting them as part of the due diligence process, but are you selecting companies based on their ability to have this type of a inherent advantage by building this last mile training? Like, for example, we work with one of your portfolio companies called Ripen, and Ripen is very much in the apprenticeship and internship space for college students, and there's a huge market for that for small businesses that we've seen. So that one jumps out to me as an example. But are there within the other companies that you've invested in, is there a pattern where you're like, this can work here, but it doesn't likely work in other sectors and markets because the business model is very different?
Yeah, 100%. And one of the most important reasons why something drops out of our funnel is if we perceive the alignment not to be there. So I'll give you a very simple example. That's kind of really complicated. Healthcare, right? We need a lot more nurses. But if you look at sort of healthcare, the number of job openings in healthcare would dwarf almost anything else. But then you have to say, okay, well, within healthcare, well, you need a certain number of, not just, there are different levels of nurses, right? There are at least 4 or 5 major differences in nurses, right? They need a lot of technical support. So if you think about, go to the hospital, just how many certified personnel you walk into, right? Someone who's going to take your blood pressure, someone who's going to do your CAT scan, someone who's going to, it's not just one thing. And so I'll take healthcare as an example because I think it's reasonably, people kind of get it immediately. Training nurses is really hard. So one of the first places we went with healthcare, and we invested in a company that does staffing for school districts, is registered behavioral therapists. These are people who work with kids primarily with autism or other kind of special needs, social development kind of needs. And this is someone who once trained can, and it's a relatively, it's not a 5 year, it's a relatively low level of training. But once someone has that training, then they can actually come in and help out in the school and actually work with a kid who's got learning issues. And that process takes someone from earning call it minimum wage to earning enough to have a family, right? And so that's really transformative. Now within nursing, we could have done a lot of things with nursing. We identified a very specific niche to do that. And one of the things we're doing now is we're allowing those people, after they get that sort of low level of certification, actually enroll in company paid nursing programs. So then they can become a more formal nurse that, of course, would lead to an even higher pay rate. So, it is really, really important to not just say, hey, I'm interested in the sector. I'm going to create talent in the sector. You got to be really, really intentional about where you're creating talent, what specific certifications you're doing. And we spend a lot of time on that.
Yeah, because there's a couple of thoughts I have on that, because on the one hand, you have to be selective, but I'm wondering, does that limit your market of the types of companies that you can potentially invest in? Are there, like, in terms of people that fit your profile, like, does the TAM technically shrink when you're looking for deal flow?
Yes, but I mean, your biggest. If you think about what we're doing, right? Think about areas of the economy where there aren't enough people who are trained to do them, and like your mind explodes when you think about that. So, we think of ourselves really as like a business services investor, where we can add specific talent, we can add specific advantage and organic growth very quickly through this avenue. It's not always this full apprenticeship program. Sometimes it's more generic human capital development. But so we don't really view it as a small market. We view it as a very large market. But it does help narrow where you spend your time. I mean, the hardest thing as an investor, and I think for most people who have kind of look around at the world as CEO level, C-suite level, or investor level people, the most important thing is where you spend your time. And so what this lens allows us to do is sort of say, hey, if you're a generic, IT consulting firm, we're not interested. But if you have a specific niche, we're really interested. Plenty of ways to make money in generic IT consulting, but we're looking for a company that does, as a workday or a Pega, or think about these kind of big markets, and so that allows us to, we see a huge amount of deal flow, a huge amount of opportunity. But it's really because we view it looking at visiting an HVAC company next week, right? There are lots of areas
where this type of approach can help. So that makes sense. In terms of, on the flip side, so you have the deal flow and actually sourcing of the deals, and let's say there's enough of these companies out there. Like, how are you pitching LPs on this approach? Because you kind of have to get their buy-in on this investment philosophy, right? So what has worked there and what has resonated? Because you're kind of competing for those capital dollars with other private equity folks that have a different investment thesis or philosophy.
Yeah, look, I think the most important thing when you're I think let me say it how I think about the world, and I think about the world as you really want to invest with experts who have a specific way to drive value, right? In the current market environment, you could get an unlimited number of teasers. The classic funnel for a private equity firm is 1,000 teasers, 100 NDAs, 10 management meetings, and a deal, right? And look, that clearly works. And there are wonderful investors who do have that focus. And what we try to talk about is, hey, that's not our approach. Right? Our approach is to get to know industries really deeply, work closely with founders who are passionate about the issues we're passionate about, and build a relationship that allows us to create kind of this increased organic growth, which is really we think one of the best ways to drive incremental value. And so that's how we think about the world, and we think about driving value. We don't use a lot of leverage. Our goal is really to invest in great companies where the opportunity to apply our unique skill set drives a lot of incremental value. And some folks find that interesting and want to invest behind that, and others think it's either too niche or too this or whatever. But that's how we talk about it.
It's
Or
also
that's how I think about investing.
yeah, it's also about finding LPs who kind of see the mission behind that, right? And the different.
We're explicitly an impact investment, right? I mean, and by the way, we think that, and just listen to how I'm talking about this, right? The impact is driving the alpha, right? We're not one of those people who says, "Hey, we're just doing impact because we think it's important." And look, that is great, and I'm glad more and more people are adopting, PRI principles and investing, ESG principles and the rest. We're different. We're an impact. But we're an impact fund in such a way where the impact, right, getting people jobs, building pathways to employment, it's driving the creation. Once you make that transition, right, I love being an impact. I love where I can say by solving one of society's great problems, right, this chasm between education and employment, by solving this problem, by creating pathways, on-ramps for people into degrees, pathways and on-ramps for people with or without degrees into great first jobs, I think we should be paid billions of dollars by folks for solving those pathways.
Yeah, because at the end of the day, if your approach is creating more jobs in the market, that companies can employ those individuals and grow with them, and those people can also grow in their careers and work for their clients. Like inevitably, you are growing alpha. It is going to happen over time, but you need LPs who think along that time horizon or look at investments in that way. And that's that's your job, is to find the right LPs that map to that type of a philosophy.
Yeah, I mean, look, and if you think about impact investing in general, it's one of the largest, fastest growing parts of the market, right? So we are increasingly, I think people in general, LPs, driven by two things. One is just, hey, we want to, if we're an asset holder, we want to invest in things that align with our values, and there are a lot of people with values that align with job creation, right? But I also think that a growing number of people are realizing, hey, by doing this thing, I'm going to make more money. And those are the people we want to talk to. We want to talk to people who believe that by creating this impact, we're going to make you more money. Because at the end of the day, there's just this article today, and I talk about this a lot. There's a war for capital, right? How you use your capital. If you're an individual, what products you buy. If you're an LP, what funds you invest in. You're making an impact. You're making an impact either to invest in traditional businesses that are likely, harmful to the world economy or to the world in general, or you're making a conscious decision to invest in funds and companies and products that are contributing to better things in society. And that is something that people inherently want to do, I believe. And I think what we do and what other impact managers do is really critical.
Yeah, I think you said something interesting there, which is that there is a war for capital. Like the global dry powder, I think is like 2.5 trillion or something like that. And so you have all this capital chasing after limited assets. And I would think that when you're in a deal cycle and competing with other private equity firms, and they hear this unique message from you versus just a standard private equity firm that's trying to just drive value in the traditional ways, your message likely resonates with a big section of the market, and you likely win deals because of that.
100%. I mean, and look, it's the same. We have other strategies. One of our strategies is to invest in education technology companies, right? And there, it's a slightly different pitch, which is to the founder, which is, hey, we'll help you grow from being a regional player to being a national player. We know, because we're so deep in this market, we can help you grow because we know the large schools and universities. We can introduce you. We know all the thought leaders in and around education. And in both cases, the people with whom our pitch resonates say, I want to work with these people who are going to help add value, turn my biggest problem into a positive. They're going to turn my bottleneck into a value proposition. They're not going to use a lot of leverage. And by the way, we're different than a lot of traditional private equity firms, right? Just the way, if you listen to us talk about what we're passionate about, how we spend our time, we're spending our time writing about these issues, talking to people about these issues. We're engaged in these issues because we care about them, just like our founders. And our founders who we resonate with the best are just as passionate. I like to say that, I love meeting someone who's sort of mid to late stage in their career, 30s, 40s, 50s. There's someone, and they have woken up one morning and said, it's really important that we solve this problem. And for everyone there, and they want to contribute to their community too. For many of them, maybe they'd make more money selling to somebody else in the short term. But, whether you have 30 million, 40 million, 29 million, it's not going to really change your lifestyle, right? What changes your life is to be passionate about what you do. And our best founders are really passionate about solving.
And they're mission driven. So that makes a ton of sense. So when you look at your firm and the types of companies you're investing in, how do you define success at the end of the day? If we're talking over a 5-year period or 7-year period, as you hold these companies, what does that look like, and how are you measuring that beyond just the amount of value that you're creating or how you're returning the fund?
Yeah. So first of all, we are, I said we're impact investors, which means we, first of all, care about return. We're gonna make our goal is to be a top quartile type returning funds. Let's put that in terms of how we measure it. So we've worked with we spent a lot of time on this, and again, always trying to make sure the impact is driving. So the simplest thing is, we track how many people we place, how many job placements we have. That's really easy. But how do you make it more impactful, but also help drive sort of the other agendas I mentioned, like DEI and other things that are important to society? Well, I sort of gave you some statistics. Half of our people are female in this program. Over 2/3, almost 70% are from underrepresented minority communities, right? Think about what that means. So we track that. We track what percent of our C-suite is diverse, right? We track what percent of our interns come from. It's not just about race, right? A lot of people get caught up in, and race is a big issue in society, clearly, but we also tend to look at socioeconomic status. So we have a whole thing. What percent of these folks come from zip codes where the median income is less than $40,000? Right. So when you take someone who comes from a family in a zip code that makes less than $40,000, and you get that person to make $100,000, $200,000, you've not only changed that person's life, but you've changed their whole family's life. And frequently, one or two, relatives away, right? Not just that one family, but maybe even a whole network of cousins and aunts and friends and family, and created role models and hope and really important things. So it's not just one thing we focus on. We focus on sort of the aggregate numbers, and then we go deeper and we go into things like where these people are coming from, what they're achieving, what their increase in salary is from going through these programs. On the education technology side, we actually pledged to do third-party academic research on the efficacy of all of our products. So the big criticism I don't know if you have kids or some of your listeners have kids, or if you used ed tech products, but the big knock on it is, we spent all this money on technology and it doesn't really work in schools, right? So we've pledged to have third-party academic researchers actually look at the efficacy of each of the products we invest in to show not just that Daniel says, hey, this product works, or Shiv, this product works for my kid, but day in, day out on a statistically significant way that these products are actually helping people.
That's fantastic. I think that's a really good note to end the podcast on. Is if there's a listener on that's listening that has a company in this space or is aligned with your mission, how do they get in touch with you to potentially work together or have you as an investor?
We're really excited to work with companies that fit this bill with passion, mission-driven founders. I'm on LinkedIn. Our website is Chief Partners. We're very accessible, and we write about this, talk a lot about this, think about this a lot. We have a newsletter that goes out every week, so please join. And even if we don't invest in you, please, if you are passionate about these issues, be the change in the world and do it in your company tomorrow. You'll feel so much better about what you're doing and drive a ton of value to your company.
That's great, Daniel. And we'll be sure to include the links to your website and your LinkedIn profile and all the other relative links in the show notes, just so that the audience has it. With that being said, thanks for being on. This was a fantastic episode.
Thank you, Shiv.
Thanks, Daniel. Have a good one. Thanks for listening to today's episode. Before you take off, just a few requests from our side. Number one, if you enjoyed today's content and want more of it, please subscribe to the podcast on your favorite podcatcher. Number two, if you are in the market for marketing strategy consulting services, due diligence services, or fractional CMO services, please visit our website at www.howtosas.com and schedule a consult today. And number three, if you haven't already, grab a copy of my book, Post-Acquisition Marketing. It's available on Apple Books, on Amazon, and any bookstore that you can find online. Get a copy because it walks through the framework that we take all of our clients through, and it'll definitely add value to your business. And that's it for today. We'll see you guys next time.